Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 11th of December, 2021, and this is the weekly technical analysis for the Euro, the Cable, and the Aussie Dollar for the third week of December. Let's begin with the Euro, and as expected, the market has just consolidated into another narrow range for the week, and I have gone back to the previous background to highlight the monthly and weekly pivots. You will see that I've tried to enhance and enlarge the wordings here, but you'll see it will default back to the original settings of the indicator once I switch timeframes. But for now, let me remind everyone that the monthly pivot is at 113.80. And for last week, the weekly pivot fell down to the 113.09 area. So that was quite close to the 138 fib extension, just above the 113 area. And this box from the previous week, we extend it further out now. We can mark it from, it has narrowed down and more for last week in a range of only 130 pips or so. So it has just started the week dipping down lower to find some support. Didn't get close to the 112, and then climb up to test the previous week's highs, and then settle back to the 138 fib extension area. So the resistance at the monthly pivot was not threatened at all. And support lower at the 162 fib extension, and even the 112 was not threatened. So it's been oscillating, centering around the 113 level. Since there wasn't much news for last week, in fact, for all the major pairs. However, this coming week is full of central bank news, especially with 5 central banks. Last week was RBA and Bank of Canada. This week, there's the FOMC, the ECB, and Bank of England. And on top of that as well, there's Bank of Japan and the Swiss National Bank. So plus as well additional fundamental news for their respective economies. So for the Eurozone, there's the flash manufacturing services PMIs for all the major economies, and the final CPI on Friday. But the ECB is due to have their meeting and their press conference on and decisions on their rate and policy decisions, and that's likely to be unchanged for now. So far, the growth in the Eurozone has been a bit mixed, and they have not made any major policy changes. The QE is still continuing until end of March. It will expire end of March, so we'll see if there's any extension to that, or whether they'll leave it till the next meeting. Right. So, and they will also be exposed. Euro will be exposed to the FOMC decisions as well, which is on the Wednesday. before the ECB. So that will be some trigger for that as well, whether the dollar will be boosted or weaken further. That will impact the euro. And let's take a look at the weekly time frame. And when I return switch back, its fonts will change. So for the week, it will be not surprising that it's in a narrow range. And you'll see spinning tops again for almost a doji since the previous week, and in an even narrower range. So if I just extend this out further. And if going back to the daily time frame, you see these fonts have changed. Let's go down to the 4-hour time frame. And for the last 4 weeks now, it has been consolidating below this one, actually below the 114, and now below this monthly pivot. So this coming week could be a trigger for the euro with the ECB meeting and decisions coming up. We'll see if there's anything that will drive this euro to push up higher and recover. Let's go back to the daily time frame. All right, so resistance is still at the monthly pivot, and above that, the 114. Below that, there's still support at the 162 fib extension, and there is a, go back further, support swing low here from May of last year. That's just above the 162 fib extension, so that's why it's been finding support above 112. Okay, let's take a quick look at the US Dollar Index Dxy, which is not surprisingly also consolidating. It's the daily time frame, and it was consolidating inside this triangle. It's extended further now. So this has extended into a narrow box as well. And the resistance zone at the 162 fib, we can move this up to the swing high here, which was on the Tuesday. Support is still at the 138 fib extension. And above that is the 200 fib extension if it does break out higher. And on Friday, there was a dip lower, even though the US CPI data was stronger than expected, and this could have been priced in now after trying to test the upper regions here and probably awaiting this coming week's Federal Reserve meeting. So this is just basically waiting for news and a potential breakout. So if it breaks out higher, then 200 pip extension will be the key target. And if it does break down lower, and there is a swing low that is near the daily 55 EMA. All right. So let's see on next week's Federal Reserve, what their major decisions will be. Let's move back to Forex pairs and move on to the cable. And likewise, the cable has also been consolidating. Support is at the 162 fib extension, and it did try to reach there on Wednesday, but not hit it, and managed to find support and turn back up, back above the 132.00 and close at right at last week's weekly pivot, which is at 132.65, and the monthly pivot is still right next to the 134 area. So for now, the near-term resistance is at 133. Let's remove this. Support is still at the 162 fib extension. But for now, it seems that it has found some support here with this rounded bottom above the 162 fib, and has managed to recover 100 pips here from these lows. So next week we'll see if it's also the BOE meeting and decisions on the Thursday. So FOMC on Wednesday, ECB on Thursday, and as Bank of England as well. And we'll see if it's able to break through the 133, target the monthly pivot, or if it's going to break down lower. So for now, the Bank of England has been rather cautious since expectations from the previous meeting. They did not increase rates as widely expected. And now with the Omicron variant as well, they have been more cautious. So we'll have to wait and see, probably for next meeting. Likely no change for this round. But if there's no major impact from the Omicron variant, then likelihood that next year there could be multiple rate hikes. So then this will be probably a good base to build up from. and to extend its gains for next year, for the next meeting and beyond. All right, there is also some other news across all the economies, the flash manufacturing and services PMIs, and then on Friday there's retail sales as well for the UK. Okay, let's take a quick look at the weekly time frame, and with the slight bounce on the Friday, giving it a bullish close. So spinning top with a more bullish body now, and looking to provide some strong reason to recover next week and perhaps climb up. And you see that the weekly 200 EMA is also just below the monthly pivot and the 134. So that's at the 133.85 here. So that would be the key target if it's going to rise. Daily time frame. So we could also mark this zone here. This will be a key resistance zone, where above that, there's also this swing low at 134.12. Prior to that, though, there's also another swing low, but I think if it's any reason for it to recover, that should easily break through and target this zone. And just going down to the 4-hour time frame. So it's been drifting lower since a couple of weeks and has not been able to get closer to the 4-hour 55 EMA until Friday, where I managed to bounce on the US CPI data and climb up to close at the weekly pivot. So that's has been a while now, for 3 weeks, as money finally managed to return to the 55 EMA. And the 4-hour 200 EMA is also sitting right in the target zone, where the major resistance are, monthly pivot and the 134 area. So that could be another reason for it to target this zone for the reversion back to the mean, if there's any potential hawkish news from the Bank of England. Okay. All right, but for now, it looks like it's setting up for move back up, recovery. Let's move on to the Aussie dollar, where it has already recovered, bouncing up from the 70 zone, a key support at the 0.70. And that already started on the Monday. Tuesday, the RBA at their rate decision kept everything the same, and even the bond buying, no change there, and everything maintained until February of next year. And that managed to, with this cautious but slightly optimistic outlook, looks like the Aussie has made a more of a technical rebound and a fundamental one because there's still at this time some fears of the Omicron variant, and with the lockdown for at least not a lockdown but a barring of entry for visitors from those countries exposed to the Omicron. So looks like more of a technical rebound and return back to test the swing low by Wednesday, and then just consolidated until the end of the week. And this coming week is only the jobs report on Thursday, so it's basically going to be exposed to the Federal Reserve decisions and statements. So this resistance now has basically just moved up now to the next round figure at 72. Support, that's definitely a major support at the 70, but I think I'll move that up to the 138 fib at 70.23. Last week's weekly pivot was at 70.54, and the monthly pivot is at 72.42. So this close on the weekly will definitely be a strong close, and it is an engulfing, bullish engulfing candle here, right back up to this swing low. So there is an opportunity for it to continue its recovery, but only if the US dollar weakens and does not take over and push up higher. If it does, then that will impact the Aussie dollar as well. So the next major resistance will be at the 78.6 fib retracement and the monthly pivot zone here. Can mark this as an additional resistance zone. If it does strengthen even higher. So taking a look at the 4-hour time frame, you can see that it was rallying all the way from the start of the week, climbing up all the way to test this swing low, and right, finding support as well from the 455 EMA. Now the 200 EMA is coming down to the middle between these two resistance zones. Okay. So there is a bunch of support here along with this swing low, which could form that resistance we saw with the 200 EMA for our time frame. That could be with this swing low here actually. So if we go back to the 4-hour time frame, and yes, you see it 200 EMA sloping down to that area. Okay, so let's see how the Federal Reserve will impact the Aussie dollar, as well as the other major pairs, where the ECB and the Bank of England will also be having their meetings. So it's going to be a very packed week next week with a lot of volatility. So do take note and do be careful. Stay safe and have a good trading week. And do check out my other video on spot gold and dollar yen as well. And cheers for now.